Hello traders, welcome to this live intraday strategy webinar. Today is Thursday, January 19th. Michael Boutros here with you this morning. We just got the release of housing starts in the U.S. Coming in at 100, let's see, slightly stronger than expected, 11.3% month on month. We were looking for a print of 9%. We just got building permits also slightly below expectations. We have a bit of an interesting scenario here this morning, guys. We're having some technical issues and actually we're not able to get the charts loaded till just this moment. So let's jump right in. Keep in mind that the ECB is on tap also. We'll have Mario Draghi, which will be on the wires momentarily. And we'll cover that live as well. Bear with me one sec, guys. Okay. We're up. Looks like we're good. Looks like we're good to go. So we'll be bringing you comments from Draghi. I'm going to be monitoring the ECB press conference, obviously, as it goes on. Confirms bond purchases of 80 billion euros a month through March. Draghi sees rates at present or lower levels for an extended period. QE will run until inflation path consistent with goals. These are all things that we have heard from him before. Here's what the euro standings look like so far. And we will go over yesterday's update in just one moment, guys. Bear with me again. Sorry about this. Okay, sorry about that. Again, it's been an interesting morning. I'm glad that we got things up and running. Pooja, Pete, Rich, Safil, Sharif, Theo. Good to have the whole crowd here with us this morning. So, again, I'll be monitoring those comments coming from Mario Draghi. We want to take a look quick at the dollar index. We'll touch base on the Aussie dollar, Euro dollar as we get through the ECB here, the British pound. The Euro pound cross has been very interesting and continues to be pretty fruitful. Aussie yen, Pooja, I see you in the room, did probe higher yesterday, so a very interesting move that we saw into the close of U.S. trade. I'm still covering that one. Comwall says very good analysis on nat gas. Hey, cheers. And copper. Cover 2 lots of nat gas, waiting 3.24 on copper. Again, short, waiting for your levels. Thank you. Copper and nat gas. I'll add it to the lists. Okay. Okay, so I got out at break even yesterday in Aussie yen, says Pooja. Good thing. I was thinking of you as it was making it run at those highs. And it just looked like it had so much steam behind it. And once it cleared the weekly opening range high, this was sort of the last-ditch effort. And obviously that gave way. So we'll go over that in a moment, Pooja. I'm glad that you didn't take too much of a hit on that. Euro CAD, you want to take a look at? We'll jot that down. And as always, guys, anyone in the room, always feel free to throw out any trade setups or questions that you have throughout the course of the session. Okay, again, I apologize. I'm a little disheveled this morning, but we'll fall right into it. First things first, here's what the dollar index looks like. So yesterday when we were talking about the index in the webinar, we were talking about the level that we rebounded off of, noting that there was some possible upside slope still to go, or upside play rather. There's room for the dollar to give a little bit more of a topside pop. Interestingly enough, oh, by the way, Draghi says underlying inflation pressure remains subdued, says QE can be extended if outlook worsens. ECB ready to act using all instruments within its mandate. Expects economic expansion to firm further. These are all pretty much fluff comments. The only thing is the underlying inflation pressures remain subdued. That's going to be something that you're going to want to pay attention to. Is coming up. It's highlighted here on the wire. So we'll continue to monitor these. Again, the more dovish Okay, the less hawkish he's leaning, the more it might curb some of the strength that we're seeing broadly in that euro move. So we'll take a look at that. But as it pertains to the index, listen, you had an inside day reversal yesterday. So all of yesterday's price action was within the encompassing previous day's candle. And sometimes these can be capitulations. They could be just near-term sort of exhaustion moves. At the end of the day, there's a slight adjustment to the slope. Yesterday, we were working with these 3 reference points. If you shift it down to the low that you made back on the 5th of the month and the subsequent high on the 11th, the median line actually gives you a little bit better play, and the lower parallel actually catches support really well as it converges on that 100 spot 37 spot 43 region. Again, a 100% extension off the highs, 2 equal legs down, a 786 retracement off the low, and the lower parallel, okay, which is now, this consists of the 3rd touch of that parallel. So on the near term, here's what it looks like intraday, okay? That's that same slope. And even if you look at it from here, you can see a lot more play along the median line. Again, the lower parallels catching a pretty nice rebound here on this upside move. So largely speaking, okay, you're still looking bearish sub the monthly open, sub 102, this region here. As long as price preserves below the lower parallel, the monthly open, the 50% retracement, you're largely looking for this rally to extend or to give you an exhaustion near that level. As it stands, we're testing resistance right now. If you take a little slope right off this, you can see that we're basically probing through it right now. If that pops, I'd be looking for a little bit more upside here for the greenback before it turns over. Broadly speaking, guys, the larger picture has not changed. Came off of a big region, and the risk still remains for a move lower, sub 102. The immediate risk is for a push into that 102 barrier. Obviously, tomorrow is going to be the inauguration. How markets are going to actually react and what kind of intraday price action. Again, like I said yesterday, not something I'm really interested in trying to plan a strategy around. But as it stands right now, dollar looks like it's got a little bit more fuel to the upside before turning over. Same region we were talking about yesterday, guys. We were noting the same sort of expectation that we could see some further strength. Keep in mind that the opening range high for the week is just above that 10160 level. And if that pops, objectively, you'd be looking for that thrust to get a little bit higher up, near 102, near the weekly, monthly, yearly open, 102.14. Questions on the dollar index? Okay, more headlines from Draghi. Sees no convincing upward trend in underlying inflation. Not the kind of rhetoric you want to hear from the central bank, specifically central banks that are trying to stoke inflation, and certainly keeps the monetary outlook for the euro tilted to the downside, meaning no hikes, no normalization, continued easing, even further expansion of the QE operations could be in the works. You're seeing the dollar here continue to get a lift. Remember, guys, when we're looking at the dollar index, specifically the ICE dollar index, the DXY, very heavily weighted the euro. It's a basket of 6 currencies, 60% comprised, of the euro dollar. So certainly as we see the euro continue to move lower, not surprising to keep this dollar afloat. Any questions on the dollar index before we move off? That was number 1. Okay, second on last night's update was the Aussie and the Aussie yen, but I do want to just jump into the euro right now since we're kind of on the move. Here's what euro looks like. Now, let me start off with the daily chart. Here's what it looked like last night. You guys know, as we talked about in the webinar, I haven't really been following the euro on an intraday basis or trading it aggressively intraday at all since the start of 2017, to be quite frank with you. Don't really like how this thing was reacting near the lower parallels here on the daily chart. The messy start of the year was certainly very whipsaw. And while we did like the general upside bias, you had a lot of really stern pullbacks that just had me sort of sitting on the sidelines for the euro. So the only thing that we wanted to highlight yesterday and heading into the ECB was this 107.07 level. It's a basic 38.2 retracement from the decline off the highs that you made in November, but it's also the median line for the operative formation we've been following off the high. This is a modified pitchfork formation. Again, while the median line itself did give us some play, parallels off that really what called price action with a little bit more precision. And here's that last sort of stoke, move lower. Again, very similar to the other pair that we were just looking at on the index with an inside day reversal bar off resistance. Certainly keeps the near-term threat for a move lower. So that's all I want to really bring your attention to on the daily chart. 107 was actually a pretty big region. Just above it, again, that median line for the multi-year formation we've been following, or the multi-month formation we've been following since last year. Momentum also turning right at 60, right? So not giving us that conviction that we're seeing a big turn in behavior yet. Look back to the last couple of times we've seen momentum tag of 60. It was right here. Different part of where we are in trend, certainly, but some room for pause. Here's what the intraday chart looks like on Euro. And here's what we looked like last night. Okay, noted the upside bias at risk sub 107.40, which would have been the near-term bearish invalidation. That would have comprised two equal legs up and would have necessitated a break of that long-standing median line formation off the highs. So my point being, from here, downside targets, an area of interest for more important support, possible rebound on the long. Your first initial target is 105.74. It's right here. A basic 38.2 retracement. But more importantly, that 50 line for the ascending median line formation, which also converges on downslope support as well. And the weekly opening range low. They all stack up right here. So for Euro, you've got a very, very clear-cut support target that you would need to clear to really validate a near-term reversal off the highs. Such a scenario, again, you're looking for the monthly open, you're looking for the lower parallel, you're looking for that 105.18 level into the 105 handle. So, you know, as far as the Euro is concerned, below 107.40, you're at risk. That's really the level you need to clear to get continuation of this trend. As of now, I'm still looking for a move back into slope support. But watch 105.75 first. That's going to be a big sort of test. The weekly opening range low, that 50 line, that 38.2, they all converge right here. Questions on Euro. Draghi says ECB hasn't discussed reducing stimulus, says fiscal policies should be growth friendly. All Euro area countries need structural reforms. That's sort of a staple that he says every time. Structural reforms must be stepped up substantially, urges other policy actors to contribute more decisively. Draghi says exchange rate not a target and says it's too early to comment on Trump statements. ECB hasn't discussed reducing stimulus. Says the exchange rate is important for growth and inflation. So here we go with the jawboning on inflation. Let's get that 30-minute up. Testing the weekly open here as near-term support, guys. 106.03. Cites strong G20 statement on exchange rates. ECB says inflation still subdued in the Eurozone. So other wires here, some Reuters headlines coming out, they're all sort of highlighting this more cautious approach from Draghi. Says G20 pledged to refrain from competitive FX moves. And as more attention is brought to the FX world, as it were, on the political side, it's going to be interesting to see how this all pans out. For us as technical traders, or just traders in general, it kind of tends to make noise, but obviously can produce much more volatility. Okay, so a note here from one of the bank research says the tone and message from Draghi's statement is largely as it was in December. Market clearly expecting, or was expecting, a step up in hawkish commentary. And I think that's sort of what you're seeing reflected here in trade. The ideal scenario, I think I noted this in last night's piece, guys, for the Euro, at least from my standpoint heading into today, was a rally into this region to get short. And then actually, if we do see a move into these support zones, specifically lower parallel monthly open, I'd be looking for re-entry on the long side. So we never got, obviously, the pop higher. If we break below the weekly opening range low, that's sort of your mark to look for a bigger reversal here in euro. Still not my favorite trade, but we had to highlight it today, obviously, for ECB. So I wanted to make sure everyone has this on their radar. Any questions um, on euro? P, 105.18 long entry. If we get into 105.18, I would be looking for support. I'd be looking for turns in momentum. Absolutely, yeah. So my strategy is a little different, right, Pete? Because we're much more short term. So I'm not really going to put an entry for a long there. I need to see what the price is doing when we get there. Is it on a steep sell-off? Are we settling? Is momentum giving us divergence? I need those near-term triggers. But the initial zone of support, Pete, I do want to highlight real quick is 105.75. So if you're holding shorts, that's sort of a big region I'd start to clear out or at least take some profit, bring my stops to break even. But 105.18, the monthly open is there. If you scroll back in price, it's actually a really nice swing low from back here. It's the November low, monthly open, yearly open, and just below that is parallel support. So yeah, a nice zone I think I'll be looking at. Pete, does that make sense? He says, thanks. All right, cool. Sharif, Euro Yen. Let me throw that on the list. I have Euro CAD as well. We'll cover all the, obviously, the Euro pairs today. No worries. Okay, so that was Euro dollar number 2. I guess let's jump right into Euro Pound. Or you know what? Let me keep with the Euro themes first, guys. I'll do Pound Dollar, then we'll do Euro Pound. Let's do Pooja's Euro CAD first. Haven't looked at that yet today, Pooja, but let's take a quick gander and see where we're at. Okay, this hasn't been updated in some time, so bear with me one sec. And we'll see if we can't get some tune out of this trombone. Okay, so objectively, just looking at this real quick, I can tell you some interesting stuff. That's kind of just popping out at me right now. Don't want to stress that. Is this, you've simply set a pretty impressive monthly opening range. Here's the monthly yearly open. Came to that 764 retracement, held as support. In fact, if we drop that into a classic 786, which is the actual fib derivation, that has you right there. And the opening range high, monthly open, monthly highs, all stack up right here. We tried to probe through it in overnight trading, got a pretty mean pullback. So as far as I'm concerned, this is the major key range to keep in mind heading deeper into December or heading to the December close. This pair loves to range bound, loves the back and forth price action. So be mindful of that. I don't want to stress this slope just yet. Let's see what it looks like on the near term. Here's a 4-hour. Again, I want to see what this looks like here. Draghi says increasingly clear policy stance is successful, says council had sense of satisfaction regarding the December decision, says discussion was unanimous reflecting on the December move. ECB ready to upgrade, revise QE strategy if needed. Too early to comment on Brexit negotiations, and inflation must be sustained Euro area wide. The ECB is looking for durable convergence of inflation. Whole lot of fluff, Mr. Draghi. Not really anything new as far as policy stance here, but back to price action. Here's your 2017 open. Yeah, so this is what I want to say on this. Who is this for? EuroCAD. This is Pooja. Please show the zoomed out daily if possible. Was looking for a short. I was just about to say, here's what I would say. Near-term price action, it's really lackluster. It looks like you could be just kind of like holding a near-term range at the lows. Don't really have a very strong opinion on this. And if we take relative price action in Euro and CAD subsequently, it doesn't give me much conviction on this either. So if you put a gun to my head, Pooja, as I always say, on a snap judgment, yeah, I would be looking for a stretch, maybe one last stretch higher towards 142 and then a pullback. But yeah, you're at risk for a couple of different reasons. Obviously, the major low that you made back here in, what is that, April of last year, that whole region was pretty strong defense. And again, the fact that you probe through the monthly open, the fact that you probe through the monthly opening range high, and kind of came off here isn't leaving much room. And in fact, this high ends up being an exact 618 extension from the advance off the lows. What's that 618? This is okay. I don't think we need this on the intraday chart. So here's what I'd be looking at, Pooja. This is the daily chart. Let me know if you need a farther out picture or zoom. Again, guys, remember you always have that camera button, top right-hand corner of your GoToWebinar screen. Feel free to click on that if you want to take a snapshot of any of the charts. Pooja, does that help? That is Euro CAD, number 3 for the day. ECB hasn't discussed how to implement reduction of QE. That's interesting. Draghi says ECB must maintain its accommodative monetary stance. Says nominal wage growth remains subdued. Heterogeneity in inflation can be coped with. Says increasingly clear policy stance is successful. Okay. Hasn't discussed how to implement reduction of QE. Says low rates are needed now to get higher rates later. Thanks, took a snapshot, says Pooja, right on. Says we'll keep a lookout if we get back near 142 for shorts. I think that's a pretty decent region. Not only that, you actually also have the monthly open from last month right in that sort of level as well. I just want to see a little bit more structure. You know what I mean? Once we get a little bit more swing, another high, another low, maybe you get a little bit more conviction on this slope. But as it stands right now, I don't really want to stress it too much. We haven't gotten enough rebounds or plays for it to be something I'd operate off of. Okay. Euro Oz, number 3. Number 4, we'll jump into Euro Yen. That one was for Sharif. Sharif, here's what Euro Yen looks like. So we were talking about Euro Yen turning from resistance, it seemed like forever, and we finally got it. I highlighted this on the intraday charts a couple of updates ago. The basic key level is 123.47. We finally pushed off that last week. We finally got the close back here. Happened a little bit later than some of the other yen crosses, but on the 12th, which kind of conviction was the conviction breakdown. On the pullback here, I love where we're capping out. If we're heading lower in euro yen, and that's a move towards the lower parallel here, we really shouldn't go any higher than this now. Okay, this is a 618 line of the ascending median line formation. So of this range, this is the 618. You can see some really nice slope off that. Resistance, breakthrough, support, support, perfect support touch, break, now resistance. Also a basic consolidation formation. Trendline support, support, break, now resistance. I'm looking for this thing to teeter out soon. Now, the only thing I don't like about this trade is that it's the yen. It's really the biggest variable you're trading on euro yen, I think, is clearly the yen at this point. I mean, here's what it looks like on the intraday chart. Okay. Sorry about the silence here, Sharif. I'm just going right off the cuff. See if we can't figure out some juicy levels here. As far as structure to the decline, okay. There's a little more room that you could stretch into 122.73 on like a real, see how the U.S. Open looks like. That would be a little bit more of a concern. 618 would be the upper parallel of this formation, which we have no way of proving, by the way, or we have any conviction on being in play per se. But I am looking for exhaustion. That's all I can say on euro yen. We were looking for the turn. The turn teetered out. The only problem is that you filled the gap from Friday open, or from the Sunday open, excuse me. Then you went through higher. If this is a weekly opening range break, you actually should be looking for a stretch into a Thursday high, or a late week high, whether it's Thursday or Friday. You get the picture. So, which is why I'm a little hesitant to fight this here. But I do think near term, you look for an exhaustion high here in euro yen, if our interpretation of the yen crosses is right. Um, I think your yen should, the top side should pretty much be limited in the near term. On the longer term picture, don't forget where we are. This is a pretty, clear uptrend still. I'm looking just on the correction that we were looking for. The break last week was a move back into slope support, so you can get a little bit more of an aggressive stance on the trade. But as it stands right now, yeah, I'm looking for a little bit of an exhaustion move off this high. Sharif, does that help? Make sense? And that is number 4. All right, he says, yes, right on. Okay, I want to take a quick look at the pound, and then we'll jump into euro pound. Draghi says, by the way, ECB didn't discuss tapering. ECB has more room to diversify after the December move. Says must be patient on inflation. Low rates needed now to get high rates later. Pretty cautious tone. Pretty cautious tone. And it does seem that earlier statement largely is a good interpretation of what's going on here. The markets were looking for something a little bit less dovish, maybe leaning towards hawkish. We got those wage inflation numbers, which were actually pretty decent. So it's interesting to see a little bit more of a cautious tone here by Mario Draghi saying, you know what, hold up, we're not quite ready to move on rates just yet. And there's actually a lot more room to do more if need be. It says companies' balance sheet repairs have progressed. The risk of deflation has largely disappeared. So it's really more so about stoking inflation than about combating deflation. Pound dollar looks like this. Then we'll jump into euro pound. Here's what pound looked like. Pretty clean. The pullback, I was looking for a little bit more juice on it. I did have a short in play yesterday. Here's what pound looked like last night. And basically, we capped out right here. If you guys remember the earlier update, the previous day, we were looking at pound dollar, and really the basics of this trade was the major key resistance that we'd come up to, We said, you know what, this is a big, big resistance level. You don't want to be bullish into this region. You're at risk for exhaustion. We tapered out right into that, and the pullback is now what's in focus. Here's the intraday chart. Ideally, a move into 121.77, 121.80 would have been like the entry or the sweet spot, in my opinion. And then yesterday, we looked at the pullback coming into a basic 236 at 122.50, which offered a little bit more of a support bounce. Here's what it looks like now in the intraday. Okay, I think you can get a little bit more chop here. Look for a new low. I do want to look to fade that low. I do want to move higher and ultimately a break out of long-standing descending median line formation. So these breaks can oftentimes be really hairy, really shaky, get multiple attempts, multiple breakout, fake out type moves. But keep in mind, we got the momentum trigger break with that close on, what was that, on the 17th, really validating a near-term trigger in daily RSI on building divergence. I'm looking for a higher move here in pound still. Now, the fact that we came right into the monthly open here and pulled off, again, has me thinking that we have another low to stretch to make. Levels remain unchanged, and largely speaking, I'd be looking to buy a pullback in pound. As far as playing the breakout, that's the only thing I have kind of issue reservation here. I'd be more inclined to work with 123.80 into 124.33 again as a key resistance zone. Remember, that was sort of the big spot that we talked about early in the week. It's a 2016 low day close, hits at 124.33, and a basic 50 of the entire decline off the highs from December comes in at 123.80. 121.80 to go long. Pound, says Theo. Yeah, if we get down there, I would love it. 121.80, even into 122, I'd be looking for exhaustion. Keep in mind one thing, Theo, this is also Friday's close. So objectively, from a price standpoint, it is an area of interest from technical support. And right now, over the next couple of hours, it converges on the parallel, the 50% retracement, all that good stuff. Gives you a nice little cushioned 20 pip region of 21.80 into 22. Now, if this last spike, and again, this is something, just a drill, I do not want to make this a habit, but if this is a near-term sort of swing, a measured move, just to see if we can get some polarity here, gives you 100% extension at 121.75. So even on a correctionary two-leg down basis, it takes you right into that same key region. All right, so that's, yeah, I mean, I don't know if we get the pullback is my only issue here, Theo. I think this thing might sit here lateral for a while, then just rupture. I don't know, but I do know if we do get a move there, I'll be looking for some entries on a break above 124.33. That's really where you want to get excited and look for a move well above 125. You're looking at the 100-day moving average. You're looking at a really nice pivot. This is just basic channel resistance, pivoting off the lows from 2015. Really nice plays here all throughout last year. Converges on that same region. Conwall, what's... are you asking? He's asking bullish invalidation of sterling dollar. The level of which I'd be no longer interested in longs is actually gonna be right there at the monthly open for the near term. Near term, if we break below this, I don't want any part of trying to fade this because you're in a very strong downtrend. It's just that this one reversal day does change things, at least in my mind. Let me just put one thing in mind here, Conwell. We are in, yes, you're 121.80. You're right. We are in a very well-defined monthly opening range. Here's your January open, January lows, January highs just got tested. So objectively, this is the range that you're in. From a trading standpoint, if we're looking for this to be the bottoming process that we're suspecting, it should stay above that 50 line. So on a pullback, we should see a rebound off that and then a move higher and a breakthrough. That gives you basically 21.75, 21.70 Same region, which is the monthly open, Friday's close, 50 comes in at 122. Make sense? So on the long side, it'd either be for me a move down here to get long or a break above 124.33, then the pullback to play that extended move towards 125 and 125.60. He says, yes, sir. All right, cool. Let's see if Sterling's got some legs. So with that outlook in the British pound and that sort of broader picture of what we're looking at in pound price action, here's the 2-hour again. Here's what euro pound looks like. So pound was number 5. 6 is euro pound. And here's what we looked like last night. So I can't remember if I added this slope here in the webinar or if I added it last night, guys, but this is a near-term slope that we sort of just kind of put together last night that showed really nice tag of the lower parallel. Now, I don't want to get too excited on these moves, again, when we get just the first touch, because it could be just chance, and we want to see a little bit more conviction reversals off the structure. But it highlighted a same region that I've been looking at for a while, and that region is still 87.18. The median line, this is longer term slope resistance on the daily chart. That's this gray line. It's the same line you're looking at there. And basic trendline resistance just off the highs. All converged right there. And that was going to be our near-term bearish invalidation. As long as we stay below 87.18, you want to look to sell rallies, ultimately looking for a move into 85.90. And just lower is that lower parallel that you're looking at right here. So that's basically the move. Or that's basically the premise of the idea. You want to stay bearish below the median line, just as we would on this pullback play. Here's what euro pound looks like now. The stretch higher didn't quite get near that bullish or bearish invalidation level, but the turn sat at support. Break lower is now coming into, again, that parallel. Major key target is still on tap, 85.92, and I still think that's what you want to be looking for on this move lower. Okay, so it's the 50% retracement, lower median line parallel. If this holds slope support into the U.S. Open here, watch out. Okay, in that scenario, you might actually finally get a move into 87.19. But all indications, at least from what's happening in the Open here, you kind of want to look and see if you can get that spill into the 86 handle, basically 85.92. Remember, these are pound pips, right? So although the ATR tends to be a little bit tighter, keep in mind your P&L will be off that sterling pip. Look for immediate resistance now to this region. And again, near-term bearish invalidation still up at this confluence region here. Basically this median line. Questions on euro pound? Pretty darn close. Pretty darn close. Random question, always allowed here. Sharif says, how early do you start looking at charts? So typically, Sharif, as sad as it sounds, at night, typically right before I go to bed, I kind of have a quick backdrop. I have all my charts set up. And then as soon as I wake up, looking at 4:45, 5 a.m., kind of just take a view of things. I don't really get too involved. Get ready for work, come in the office, and then typically before the webinars here, I get a little bit more in-depth on a review of what I'm looking at. But look, there's a lot of ways to alert yourselves, guys. You can get into Alert FX, which is a service run by a good friend of mine. If you want just basic alerts, there's a lot of platforms that can give you alerts to the key levels. The most important thing is you have the game plan mapped out. And I know it's a corny saying, but it's true. Trade your plan, or plan your trade and trade your plan. So know where you want to be what levels you want to operate at, know what levels of interest you want to be moving on, and just set up those alerts so that when the market does start to reach those zones, you know to look at your charts. Obviously, guys, I completely understand not everyone's going to have the time like me and JB to sit down and really study these charts day in, day out, all day. That's our job, right? That's why we're here. But certainly when you're looking, if you seem to be missing some of the intraday opportunities or some of the trades, feel free to set yourself an alert or do something to make sure that when the market does start to approach those zones, you're notified. Okay. That is Euro Pound number 6. Any questions? Going once, going twice. Aussie Yen. Excuse me, let's do Aussie Dollar first, number 7, then we'll jump into Aussie Yen and the commodities. Here's what Aussie Dollar looks like. And here's what it looked like last night. So for the Aussie, here's what we look like heading into yesterday's data release. So another one where last night, this one was definitely added last night, there was a median line formation I kind of added. I didn't want to get too excited about it, but it kind of did have me looking for more exhaustion. And guys, we're still there now. So there may be an opportunity here heading to the U.S. session. I'll point out a couple of different things. First things first, the data that we got out, wasn't really like disastrous, but here's what it looked like. You saw unemployment did uptick to 5.8% from 5.7%, and you did see the participation rate uptick as well. So we're going to put that as a wash. As always, when the participation rate moves higher, it'll tend to put artificial upward pressure on the unemployment rate as more labor force participants come into the broader market. Full-time employment was at 9.3. We didn't have any expectations for the full and part-time, but the biggest thing is that we didn't see any revisions to the previous of magnitude. And that means that, in fact, back in November, we did see all of the gains broadly come by way of full-time employment. Pretty good print, okay? So while the unemployment number ticked up and everyone might have ran with that at first, a deeper look sees, okay, participation rates moving higher. The gains that we saw in November are pretty much still there as far as full-time employment, and it was a decent read. Here's what Aussie dollar's sort of price action looked like. Major key resistance, or the level that we were looking at, was the upper parallel here. If this is the proper slope, you'd look for a pullback back towards 74, what is that, 74.22? Excuse me, 74.72 right here. Sort of initial area of which you start to look for some support. Here's what it looked like on the 4-hour. Okay, noting that we talked about in the webinar some slight divergence, price action making a higher high, the oscillator making a lower high, looking for exhaustion. Here's what it looked like on the 120-minute. Pullback, came right into former slope resistance. You saw a bounce, but look where that bounce held. Right back at slope resistance again for the one that we added last night. So we're still holding this line. And momentum still is unable to make a new high. Now, there's no divergence here because price action didn't make a higher high. Remember, it always needs to be the close. So we didn't make a higher high. It's a series of lower highs here. So you don't have momentum divergence or waning momentum just yet. But certainly from a price action standpoint, you are at resistance. So what's the game plan, Mike, moving forward for Aussie dollar? Here's how I would play it. I want to be short right now, basically. If I had an entry a little bit earlier on, I think I might have just missed it right while I'm talking to you here. But basically, I'm looking for entry into the U.S. Open on a spike into this region. If we get one last move higher, 76, like I said in yesterday's update, is the last-ditch effort. That upper parallel, if it gives out, probably going to see this thing into basically the August high day close, maybe as high as 77. I don't think that's going to happen. It's not my ideal scenario. But near term, certainly you're at risk while below the upper parallel here for this near term slope. And the only reason I really liked this slope, guys, as I was looking at it yesterday, is just because where we saw price sort of capitulate, break out, reversal trades right along the median line here, resistance, resistance. Once it broke, you saw the run. Right along the 50 line here, resistance, resistance. Once you saw the break, it ran, right? And then obviously the upper parallel doing its job right here. So what would mark reversal or near-term bullish invalidation would be a break sub 74.70. Weekly open, basic 236 retracement, and that 50 line. Questions on Aussie dollar. Number 7. All right, excuse me, Aussie yen looks like this. So, Pooja, I'm glad you took the break even. I was really frustrated with this trade yesterday because I was stalking it for an entry. And luckily, I didn't even get a signal to get an entry, but obviously, price action is doing what it wants to do. So let's start off with the daily chart. If you guys remember, we were talking here in the room yesterday about the nice reversal. We got off the median line. The reversal day close at 86 was so pretty. Saw a nice move off that. The gap came and filled that gap, then moved lower. We were ultimately looking for a move into 84.71, which should have been a 618 retracement of the advance. It would have been the lower parallel and a nice area of entry, again, for another push into the long side of Aussie yen. Aussie yen, if you guys remember, is my trade of the year. It has been for the last 2 years. And specifically heading into 2017, the risk was for a move lower to offer us an opportunity to get back on the long side for the broader uptrend here. Long story short, by the way, I just want to show you the weekly chart for Aussie yen. Right? Here's what we're looking at, guys. A little bit cleaner there than what you see on the daily chart. And the sort of idea heading into the start of the year was look for that move lower to get back on the long side. Ultimately, we're looking for 91.20 and 96.30. Might seem like far out ranges, but not that far off in fact. So look, at the end of the day, we made it through near-term resistance on the daily chart here. We made it through the weekly and monthly opening range highs. I do think you look for a move and stretch back into key resistance. That's 87.33 into 87.55. And that's defined by the 50% retracement. This is off the decline from the highs that you made back in 2014. 1618 extension off the advance from the lows you made in July. And the 2016 open. All converge in this region right here where we capped out back in December. I love it, Pooja. I'm with you. I mean, I don't love it. Let me take that back, but I feel your frustration. Pooja says, talk about frustration. It's a derivative of the abomination. Don't forget. Yeah, trust me, I don't forget. The respect I have for the Japanese yen over my years is unparalleled. So yes, I always approach them with more caution. But I mean, momentum isn't ready to turn over either. It's just, I think we had the right idea. I think it's been invalidated, though, and we got to know when we're wrong. So, look, if today closes back below the median line, maybe I'll take a look at this. Until it reaches 87.30, 87.55, I just don't even want any part of it. In fact, the one thing I was looking at before the webinar here today was the high day close, and that's a stretch. That gives you 86.90. I still don't want to try to fight it on that account alone, but definitely I want to see what today's close looks like. So I'm not really looking to touch this right now. Not looking to touch it right now. And actually, that's not a bad idea to copy that here. December HDC. Way overbought. Let this thing stretch. See if it holds that high day close on the close of today's trade. Okay, and that is Aussie yen. Let's jump into the commodities. We've got 10 minutes and time to spare. So if you guys have any other questions, let me know. Here's what copper looks like, Conwall. Let's see where we left off on this one yesterday. Ooh, interesting. So, Conwall, I see why you got all excited. This actually it panned out pretty good, right? I hope you got out of that. There was a nice little hold here on support. We highlighted this yesterday into the trade session, really being the barrier you need to get through to get this thing going any further. You did see that hold to the close of U.S. trade. Here's the push lower, right into that target, 258, 259, right? 50% retracement. Swing high that you made back here back in on the 5th of the month, and the rebound. Want to see it hold back below that former parallel support. This is your now new near-term bearish invalidation. Downside break, I still think you look for 255. And I want to see, is that the 50 line here touching? Okay, I don't want to stress it for now. Broadly speaking, you're still at risk sub 263. But it also looks like it could be 1, 2, 3, 4. It could be 5 wave down. So you actually need to be careful for a near-term correction higher here. And off the price action that you saw here, I do think you see a little bit more of a bounce before you move. So just keep that in mind, Conwall. Range levels, right now I'd be looking for near-term resistance at 263. If that breaks, there's room to still move higher within the confines of this downtrend. So I don't want to get too excited from here. Key support, range support, still from yesterday, 258 into 259. Oh, wow. Okay. And the high day reversal close comes in with that high. So the high day close for the year, the high day reversal close for the year, even more significant, comes right here at 266, 265.8. Basically, it's the high from here. That's key resistance in my estimation at this point. Okay. So that's what I'd be looking at for copper here. Look for this bounce higher to get us an opportunity to get short, broader, focus, lower sub 266, let's call it. Break lower from here, you're looking at 255, that's 618 retracement. And keep in mind the monthly open comes down here. This is where sort of the juicy part gets in on a really continuation lower, sort of your big zone. But first things first, look for this rebound. As far as nat gas is concerned, let's see here. Yeah, no change to any of the levels from yesterday here either, Conwall. Looks pretty good, man. So 328, I think we were talking about in the webinar support. You actually did get a strike of that right after the webinar. The rebound held near-term resistance at 333. I still think you ultimately look for 312, 311 on the way down here. Near-term resistance still going to be still at 333 there, no change. So I'd be keeping these levels exactly where they were yesterday. No change to any of that. Risk is lower sub 333 near term. A break from here, you're looking for 323 and that 311, 312 region. Keep in mind you're seeing some divergence here, okay, Conwall? If that 618 offers some support, look for a rebound. Real strong. Price action. Lower low on a closed basis. The oscillator, higher low. It's the 2 hour. It's the 1 hour. Not so much on the 30-minute. All right, hope that helps on nat gas. Quick run around on the commodities. Quick, here's gold. Okay, still pulling off that major critical resistance. Gold has been, I mean, this was the most textbook commodity play since the start of the year so far. Obviously, you all have seen this chart and that key region of resistance into 1218, which we highlighted early in the year. Big region of resistance, and I am still thinking we get some more kickback off gold, which is why I'm not surprised if we see the dollar continue to push just a little higher, right? Don't want to necessarily base my bias over the inverse correlation, but certainly if the dollar gives us a little bit of a firm footing, the fact that we just came off resistance, picture fits pretty well. So if we move sub 1200, which we're testing now, 1196, remember this region we talked about, the weekly open, 1200, the parallel here, 236 retracement, all of it lined up. Then you'd start to look for the correction to get a little bit more of a downside thrust. 1180, 1181, big region. I'd start to look for possible support, former median line pivot right here. Again, the 236 retracement. And at this point, it's also the 38.2 retracement of the advance. So 1197, 1196 could get a bounce here in the U.S. trade session, but the focus, I think, is still for a move lower while below that 1218. Big region we just came off of. So looking to sell rallies below that region in gold. Crude levels coming right up. Here's what crude looks like. So we just capped out yesterday, just ahead of that highlighted support region at 5070, which was a 618 extension from the advance off the highs that we made back in December, or excuse me, back in January. So this is right off the yearly high. 618 came in at 5070, converged on the 50 line. We turned just ahead of that. No change. Still looking lower sub 52.46 near term. And downside break. What's 5041? Bear with me one sec. Okay, we don't need that. I'd say immediate risk heading into the U.S. trade session, Conwell, right now. You look for a rebound. Look for that rebound to fail. Look for some exhaustion, near-term short entries near 53.40 into the weekly open at 53.50. That's still what I want to stay bearish below. Levels unchanged. Okay. Okay, I've got through everything. Again, I want to thank you guys for sticking through with me today. I really apologize about the a little bit messy of a start, a little bit of a disheveled session as we had some issues with the tech before we got started. Any other questions, do feel free to throw them on the message board. If not, I want to wish everyone an awesome weekend. Again, little cautious. I'd be tiptoeing tomorrow. I don't think the inauguration is going to play a major role in any type of major trading that we can do on an intraday basis to get excited about. But you know, these historical days, you never know. So keep that in mind. Again, the dollar, don't be surprised if you see another spike to the upside. The story's not even done just yet. We capped out right at the weekly opening range highs, but remember, broader picture remains bearish below that 102, 102.20 level. Guys, best of luck trading for the rest of the week, and I will see you on Monday morning on Daily FX, Tuesday, Wednesday, and Thursday, right back here on SB Trade Desk. Pooja says the 100% extension from the 29, let me see what you're talking about. From the December 29th low and the January 13th is 87.53. 87.33, I see it. Well, you got 87.53. Not sure if you're using this high. Oh, I'm sorry. I don't have it on here. Yeah, 87.54 adds another conviction on that region. It's ridiculous, right? It's like a magnet. Um, yeah, that's really the level to be at this point. But don't underestimate the high day close here. If this is a fake out, the stretch high should find resistance here, and the market should close the session below the median line. If that happens, then we're talking classic exhaustion, Puja. Um, if the stretch high maxed out here and then the close happens below the median line. But as it stands, yeah, this region is absolutely paramount. So further conviction on that level. See if we get there. All right, guys, we're going to wrap it up here. Again, best of luck trading, and I'll see you all next week. Cheers.